It is my honor and pleasure that I can take part in the Rakuten's Asakai and talk about the euro currency problems. The title is Gold Standard, Dollar Standard, Euro, and what next? After I retired from a university several years ago, this is the first time for me to speak to the audience on the economic topics, especially in English. Please pardon me for the errors of my English and for any mistaken arguments. On July 20th, the yield, market interest of 10-year bond of Spain went up to 7.3%. That is the highest level of interest rate since the euro currency was introduced in 1999. The yield rate, the interest rate of Italian bond also went up to 6.2%. It is also very high. The desirable level of the yield is said to be less than 5% at most. At that level, the government can manage to bear the burden of paying interest for the bonds, and it will help to give some time to the euro currency countries for solving the problem. By the strong appeal of leaders of Spain, Italy, and France to preserve the euro currency system at any cost, the market was calmed down. But this does not mean that the problems have been solved. Just the speculators are watching the next measures which will be taken by these euro leaders. Almost every day, the newspapers of the world are reporting on the euro currency problem from the various different aspects. Why does it happen? Or did it happen? What is the solution? What is the nature of the problem? And so on. All these complicated problems are intertwined, and they must be gotten to be straightened up. The nature of the problem is of very theoretical issue and institutional issue and of policy issue. But it is important for business persons and bankers to understand the essence of euro currency, because once we understand the nature of euro currency problem, we can tell or sense where and how the euro is going to. Without this authentic knowledge, to play with the euro is something like the group of blind men are touching an elephant and tell each other what it is. In Japanese, gummo zo o naderu. Well, next is what is the size of European Union, EU, and euro currency area. The European Union consists of 27 countries, and euro currency members are 17 countries. All these 17 countries belong to the European Union, EU. European Union is almost as large as US in GDP. The population of EU is 500 million gokunin. That is 4 times of Japan. Euro currency is very large in the world economy, and also it plays a very important role in the world politics. It is said that the euro currency problem is the problem of pigs, P-I-G-S. This is not a decent word to be used in public, but it was used quite often until some time ago. P of PIGS stands for Portuguese, I for Ireland, G for Greece, S for Spain. These PIG countries are located in the southern part of Europe. They form the southern belt of the European area. Against the southern belt, there are the northern belt countries. They are Germany, France, Belgium, Netherlands, Luxembourg, so-called Benelux, and Finland. Shows the table C. This shows the budget balance of PIG from 1985 to 2009. Their government budget balance had been improving since 1985 until 1999. They had almost balanced budget. Ireland and Spain had even surplus budget balance. The PIGS, fixed government budgets, fell into sharp deficit in 2008 when the Lehman shock of the United States hit the whole European economy in 2008. Since then, PIG countries have been continuing their deficit for more than 10 years. Their government had to issue the bonds to finance the deficit. The commercial banks of Germany, France, and UK, and the United States bought these bonds because the northern countries kept the budget surplus. The supply of southern bonds increased year by year to the limit of demand of these northern banks, and the fear of sovereign default, 国家の破産, has become a reality among the international speculators. This is the background of the critical rise of Spanish bond yield up to 7.3%, July 20th, last month. The original problem of the euro started from Greece, as you know, before Spain. The Greek population is just 2% of the whole European countries and economically smaller than 2%. In comparison, something like a problem of Miyagi-ken to whole Japan. Let us suppose the same kind of problem should have happened in Japan. It will not develop to become such a serious problem. First, the central government, Japan, will intervene and help to solve the problem. The government will give some subsidy to Miyagi-ken and will pay the unemployment insurance to the unemployed people and increase the expenditure for the public works such as building roads, construction of seaport, and so on. Secondly, the Bank of Japan, Nihon Ginko, will lend the reserve money to the commercial banks under lower interest rates and or purchase the Japanese government bonds from the market to supply more money into the economy. Namely, the government takes more expansionary fiscal policy and the central bank takes easier monetary policy. Besides these policies, in the medium and longer term, labor and capital will move out of Miyagi to more prosperous areas in Japan, and or the labor and capital may move into Miyagi from other areas of Japan. By these movements of labor and capital, the Japanese economic structure will be adjusted to a more efficient structure. But in Europe, these kinds of remedy measures had not been taken immediately when the problem came up in 2008. What actually happened is that the austerity policy was contended by Germany and executed in the PIGS countries. Austerity means strictness, sternness, and severity. In Japanese, it is genkaku, genshuku, 待望生活。Austerity is not an economic word. In plain word, what Chancellor Merkel of Germany meant is to cut the government expenditure and to raise the taxes and also not to raise the wage and salaries in order to stabilize the prices. Most German people do not like price rising. We understand their fear of inflation because they had two hyperinflation within 30 years, within a generation. One was right after the First World War, the other was after the Second World War. I have sympathy for them, for German people, but I cannot agree with the austerity policy as a remedy policy for the euro currency problem. The austerity policy seems to be very similar argument as the American President Hoover's policy during the Great Depression of the 1930s. The rationalization for this argument was something like this. Lower wages mean higher profits. Higher profits mean more investment. More investment means more production and more income, the more employment. The assumption of this argument is that the level of aggregate income, GDP, in macroeconomy is decided by the supply side of economy, not from the demand side. But Hoover's policy was completely a failure in reality. The recession got worse and worse and turned into the Great Depression eventually. The United States came almost to the brink of collapse. Hoover lost the next presidential election in 1932 to Franklin Roosevelt. J.M. Keynes, the great economist of Cambridge University in England, was developing the new economics, the theory of effective demand. The level of GDP is not decided by the supply side, but by the demand side. The level of GDP is decided by the amount of investment, government expenditure, export, and consumption. This was a revolutionary thinking. This became the mainstream of economic thinking and dominated the policy making of many countries for more than half century up to now. Fortunately, this time the austerity policy was not being pushed so strong in Europe. Instead, the new leaders took place of the old incompetent leaders this year. Among the new leaders, Italian Prime Minister Mario Monti, very famous professor in Italy, he visited Yale University and made economic research with James Tobin. And Mr. Mario Draghi, he is now leading the European Central Bank. He was educated at MIT University under professors of Frank Modigliani and Robert Solow. All these three American professors are the great post-Keynesian economists. The new leader in Europe is the French President, François Hollande. He himself is not an economist, but a politician. But he is a very enlightened person and seems to be cooperate with Monti and Draghi. These three leaders made a change in policy making in Euro and European Union. The Chancellor Merkel of Germany has become a little bit flexible, but the German Bundesbank, central bank, remains still very conservative and bureaucratic, in my view. The political measure of remedy and reform for the euro seem to be now promoted by these strong technocrat leaders. But time is limited for them to fulfill the task. Some of them, like Monti, announced that he will resign early next year. The old soldiers who are incompetent former leaders are aiming to come back as soon as possible. Next is about the euro currency system. Why the euro currency system was created at all? This is not a simple question. The euro single currency system is a historical experiment. The European countries took part in it from their various reasons and motives. One reason is a political reason, and the other is economic reason. The political reason is that Germany and France wanted to prevent another war between them in Europe. Upon a reflection in the past 2 centuries only, Napoleon invaded Germany in 1814, and the French-Prussian War started in 1870, and they started the 2 World War in 1914 and 1939. Especially the last 2 World Wars were total war, involving all civilians and turned the whole land into battlegrounds. After the Second World War, France and Germany decided to control and manage steel, iron, coal industries of both countries under their common administration in 1951. The reason for the cooperation is that there would be no war anymore in the future between them. If they cannot produce coal and iron for weaponry without the consent of the other party. This was a vitally important decision which determined the future course of Europe. This decision developed the spirits of their mutual, German and French mutual cooperation. This contributed to establish European Economic Community, EEC, and European Atomic Energy Community, the Euratom, in 1959. In early 1970s, the United States could not maintain anymore the gold exchange system. She abandoned the fixed price of $35 per ounce of gold, and the world monetary system was turned into the flexible exchange rate system around the dollar as reserve currency. The exchange rates are determined by demand and supply daily in the market, mainly in London and New York. In the transaction volume, almost 99% is very short-term money, mainly for speculation. This floating exchange rate system brought serious imbalance among Germany, France, and other countries in EEC. They tried to have a monetary union to stabilize the exchange rate. They wanted to have more stable system of the exchange rates for their better performance of economies. In 1979, European Monetary System, EMS, started. This is a monetary union of fixed exchange rate system among the member countries. This difficult work to establish the new monetary union was done by the strong political leadership of German and French leaders, Schmidt, Giscard d'Estaing, Mitterrand, Helmut Kohl. Deutsche Mark became the key currency of the EMS member countries. The 1980s were the years of Reagan Thatcher. The economies of European countries were not good, and Euro pessimism spread. European Community (EC) in 1989 to revise EEC into European Single Market by 1992. It was achieved by 1993. This meant the free movement of goods, services, labor, and capital. During the 1990s, Germany, France, and other countries suffered frequently from the attack of the gigantic international speculative funds, which are mainly located at Wall Street and the City of London. For Germany to join the single currency system meant to give up Deutsche Mark, that is a sacred cow to German people. They adopted, and to adopt the unknown common currency, euro, it must have been very hard decision for German people. But they did. Euro single currency started in 1999. This was the monumental achievement not only in the history of money and banking, but in economic institutions of human beings. Excuse me, I am thirsty. Now we talk about the success and flow or defects of euro single currency system. There is a special field in economics for the single currency area. Excuse me. The economic theory on this subject will develop very much through the present experiences in the coming years, I think. Many ambitious economists are competing on this subject. The theory is in the process of formation. The basic problem is the following. Suppose there are ABCD area, and many countries, and these countries belong to each area. Now ask yourself the following question. Among three countries in each area, three countries, which countries in this each area will be better off economically by organizing a new common single currency and participate in it? For instance, in area A, if there is a common currency, Japan and Korea, and these two countries organize a common tsuka, okane, or Korea and China have a common currency. Japan is still different. Which is better for the joining, company to a single currency? This is the problem of a single currency area. And and why they form a single currency area, and what conditions are necessary for success? This is homework for you, and should I please discuss, in the lunchtime among your colleagues. And we have famous research work done by Robert Mundell, Nobel Prize winner, and Professor McKinnon, Stanford University. It is the theory of optimal currency area. 最適通貨圏、一番良い通貨圏は何か。We can apply this argument to the single currency area, Europe. For the shortage of time, we borrowed only the conclusions of their research. The common goal of this single currency area is to attain internal price stability and full employment and external balance of payments equilibrium. Three goals. For these goals to be attained, the single currency area must have the following properties. Otherwise, the scheme will fail. Firstly, goods and services integration. For this, free movement of goods and services in the area is necessary. Here, to integrate means to combine one thing with another to form a whole. Togo or toitsu is Japanese. In Japanese, to integrate is translated Togo or toitsu. Secondly, integration of factors of economic activities, labor and capital. Integration of labor and capital. For this, free movement of labor and capital in the area is vitally important. Thirdly, some degree of political integration is necessary in order to formulate the same common policies and to have similar socio-economic institutions, social security and so forth. Fourthly, hopefully, integration of culture, moral sentiment, and fellowship spirit is desirable. The flow or the defects of the euro currency system revealed by the recession in 1999 to 2007. And the economic performance of the euro single currency system was considerably good for the period from 1999 to 2007. During this period, the euro's exchange rate was more or less stable against dollar and other currencies. Introduction of a new common currency had different impacts on the southern economies and to the northern countries. At the domestic prices of the member countries and the domestic prices of member countries especially, the prices were stable in the PIG countries, and their different prices converged to the same rate of price change, to a lower rate, about 5% until 2008. Due to the stable price, the interest rate became low and stable. Then the investment activities became very active, and the economy became prosperous. They had a boom. But unfortunately, in 2008, the Lehman shock hit Europe, and it revealed and uncovered the defects and flaws of the euro single currency system. These had been hidden during the prosperous eras. First of all, it exposed that some PIG countries, Greece, Malta, Slovenia, Ireland, and Portugal, and probably Spain, should not be admitted to the euro. They were not yet integrated enough to the advanced economy of Germany, Benelux, and France. Secondly, the shock and ensuing recession uncovered the mistakes and flaws of the design of the euro single currency system. There are three. The weak discipline of the government budgeting. Second, the weak supervision and regulation for banking. Third, European Central Bank is an imperfect central bank. Particularly, it lacks in the function of the lender of last resort, 最後の貸し手. It is the privilege of the central government that it can lend money to the sound but illiquid banks in emergency. I would like to mention the concluding remarks. I would like to point out the responsibility of the northern countries, particularly Germany and Benelux and Finland. After 2008, up to now, the euro currency depreciated and became very cheap, 1/3, against dollar and yen. Euro used to be 180 yen some time ago. It fell to less than 100 yen now. So the German manufacturers, for example, can export, say, the automobile companies as Volkswagen or Mercedes-Benz, can now export their cars easily to non-euro countries, to Japan, and so forth. And even the German exporting companies are in shortage of labor now. Their government's revenue increased, and the German budget is in surplus, I think. They have resources, money, to help the PIGs. For the survival and reform of the euro system, Germany is vitally important. I do hope German people will be a little bit more open-minded and fulfill their responsibility as the leader of Europe, not only in Europe, but in the world. The survival and reform of the euro currency countries is very important for Japan. The present world monetary system is the dollar standard system. That is, dollar is the world key currency of other countries. And more important point is the present system is floating exchange rate system, everyday exchange rate float. But the dollar is only created and supplied by the Federal Reserve, that is the American Central Bank, at their will. This is very asymmetrical, not a symmetrical standard system. That is very favorable for dollar, but very unfavorable system to some other countries, especially to Japan. One reason of the deflation of Japan is closely related to the present dollar standard system, I think. For a more symmetrical and equal monetary standard, we have to establish a monetary standard which is internationally controlled and managed for the stability of all countries. The IMF, the World Bank were established in line with this idea, but its ideal has not been realized yet, to our regret. The euro currency system will contribute for this ideal to be realized. Therefore, I think Japan should cooperate for the reform and preserving the euro system. Finally, I would like to state the implication of today's talk for the Rakuten company. Internet business is a global business in nature. Internet business promotes the global integration of goods and services. Internet business promotes the global integration of labor and capital. And these two promotions of the global integration will alter different cultures, different moral sentiment, and different fellowship spirits of the people toward more integrated ones. This integration will react to promote more integration of goods and services, labor and capital. If this virtuous circle is set in, internet business will bring a tremendous wealth to the world, I think. I do hope that the Rakuten is to be the standard bearer of the internet business in the world. Thank you very much.